Hi, this is Kerry Artak with Wicked Stocks, bringing you the Daily SPY Report for Thursday, December 2nd, 2021. Before I jump into the charts, please click like if you like the Daily SPY Report, if you've been watching it, if you find it informative, useful for your trading. And also subscribe. Subscribing to the Wicked Stocks YouTube channel will notify you if your notifications are set to on each and every time new content has been uploaded to the Wicked Stocks YouTube channel. The Daily SPY Report comes out every trading day, generally by 6 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. And so let's jump into the charts. Big sell-off on Wednesday. This downward activity has been anticipated following the settlement last Friday below the 465.98 channel bottom. Now, we almost tested that again on Wednesday. A high volatility market right now. We pushed through some minor points, some session containment levels yesterday. We almost tagged 465.98 again. And then as the day wore on, big sell-off. The crude oil market is also selling off in a meaningful way following last week's long-term sell signal in the crude market. Long-term meaning under most circumstances, I would expect several months bearish activity in crude into the lower 50s. That remains a target. $50 a barrel and change, probably 51, 52 by the time we get there. Those are rising support levels. You can see that if you watch the weekly analysis I did in the DIA, IWM, and Triple Q on Sunday. That's here on the Wicked Stocks YouTube channel. And so it's there to watch. We are getting now downside follow-through in crude. You know, and crude is an economic barometer. I don't really have to tell you that. When you get a big sell-off in crude, it's usually a sort of a big macro event globally. People are tightening their belts. Buyers are drying up. And that translates into the stock market globally as well. So that's kind of what's playing out here. This is sort of this new COVID variant phenomenon, as I've been saying. And we still haven't seen, this flesh out altogether yet. Still anticipating 441.74. That's been a 2 to 3 week downside objective following last Friday's settlement below the 465.98 formation. And we actually may reach it today. If we hold below the 454.05 to 455.52 area, which you can see here, and that is an area that can, if tested today, contain buying through the rest of the week into early next, and below which I maintain kind of a 3 to 5 day target now at 441.74. But given the heightened volatility, we may actually reach that today. In fact, let's take a look at the support and resistance. I do have a minor resistance level just above the market at 450.99. If we get some downside follow through in the overnight futures market, and we probably will, then 450.99 is a decent resistance level on an intraday basis. It can contain initial buying pressures, and in fact, below which I do think that 441.74 channel bottom is likely today. Pushing or opening above 450.99 would place that 454.05 September high in reach again, and that is on an intraday basis, by the way. So if we push or open above 450.99, you should allow for 454.05 intraday, and that is a decent resistance up to 455.52. 455.52, I don't have it labeled fully here, but it's nothing more than a 3/8 downside Fibonacci retracement from the October low about a month and a half ago or so, almost 2 months ago, against the recent high that was put out. That was last week. Seems like a long time ago since we put out that all-time high. A lot has happened since then. That all-time high, by the way, was within 1% of that long-term resistance level, which I'm showing again here. You're probably well acquainted with this chart, that 478.98 long-term trend line. We've tested several times over the last few months, most recently about a week ago, when we rallied to within 1% of it. And as I've been saying, holding below that long-term trend line, holding below long-term resistance. The market tends to seek, then once tested, long-term support. And so 441.74 I've been mentioning as kind of a 1 to 2 month possibility, the market prone to testing it. Well, that became clear when we settled below the 465.98 channel bottom about 4 trading days ago. So we may test 441.74 today. It can, if tested, contain selling through through December. And from there, we can stabilize, consolidate, and even rotate higher into later December, possibly as we move into January trade, retest that 478.98 long-term trend line. A lot can happen between now and then. But let's continue with the downside, that if we close below 441.74 today, that 427.18 long-term channel bottom under this kind of volatility would actually be in reach tomorrow. That 427.18 spans back about a year and a half. I'm going to show you the weekly chart here. The same exact formation on the weekly chart averages at 427.94. It can contain selling through Q1, and from there we can rally back up to that 478.92 level, rising weekly within several months. But I want to show you that if it gets really ugly, and if we close today below the 441.74 formation, and then test 427.18 tomorrow, and then close below 427.18, or in other words, for the week itself, tomorrow, Friday, below 427.94, then we are probably under this kind of volatility just 1 to 3 weeks away by the end of December of testing that 380.95 formation, which is a long-term channel bottom that is projected off that March 2020 COVID low. It can, if tested over the next month or two, absorb selling through next year. And that's all I'm going to say about that. Let's go back to the support and resistance area today. Once again, if we push or open above 450.99, the mid 450s in reach again, where we can actually top out through the rest of the week into early next, and below which I say 441.74 is likely within 3 to 5 days. We may test it actually today. Now, if we push or open today above 455.52, 458.68 is likely. I think that that's about all the market would muster to the upside. I was actually surprised by yesterday's rally and near miss once again of that 465.98 resistance. But so I guess what I'm saying here is if we actually push through 458.68, a big if, then yeah, by the closing bell, we just might actually reach 465.98 again. But I think in the more realistic sense, closing above 455.52 should then yield 465.98, or at least allow it over the next few days. 465.98, once again, that channel bottom, able to absorb buying through next week, and below which I maintain a 2 to 3 week sell signal well below, well, not well below any longer. It was well below just about, 8 hours ago when we were in the mid 460s, but it remains a 2 to 3 week target, 441.74. If we were to close above, and this is the last thing I'll say, above 465.98, then yeah, we should then retest that 478.98 long-term trend line again under this volatility, probably by the end of next week or sooner, where we can top out through December trade. And as I've been saying, below which the market remains prone to bearish rotation, but that's already in play. So it's a bit of a moot point. If we were to close above 478.98 at the end of any week, then we have just the opposite. This market is in not only recovery mode, but a longer term bullish continuation through Q1. And I'll point to those targets if this were to occur as we approach 478.98. I think that that's about all that needs to be said for this particular daily SPY report for Thursday, December 2nd. Tomorrow's Friday will be out as usual by about 6 p.m. Central Standard Time, Chicago. It may be a little later tomorrow, just giving you the heads up for those of you who kind of wait for this thing to come out. It could spill into 7, 8 p.m. Chicago. I'm traveling tomorrow, and I'm not quite sure when I'll be able to get to it, but I will, and I'll give it its due attention. Anyway, I appreciate you watching. Please click like. Please click subscribe. It helps me out a great deal with the YouTube presence, and I will be back tomorrow for Friday's Daily SPY Report.